Hello and welcome to another episode of the Mark Moss Show, where we're always talking about the decentralized revolution, how the world is deglobalizing, how the world is changing, and of course it's happening right before our very eyes. We talk about this so we can understand the world in better context and we know what to do about it. And so I'd like to bring to you some pieces to help you kind of change the way you think about things, some late-breaking news headlines so you can see exactly what's going on. And that's what we're diving into today. I want to talk about a bunch of stuff that was going on this week. New information that came out this week on the cryptocurrency world showing some massive competition to Visa and other payment providers. I want to look at this new world order agreement called the New Deli Agreement that was just signed at the G20, the top 20 countries in the world. I want to look at the Federal Reserve. Only the Federal Reserve can be literally going broke when they create money out of thin air, showing what's happening with the U.S. Treasury, what they're trying to do with yield curve control, and many other stories. Don't miss this. Let's just go ahead and just dive right in. If we look at what's going on in the Bitcoin and the cryptocurrency space, it's very interesting because we have this new technology, this new incumbent technology, and here we are over a decade into this kind of new technology being used. And still today, people say, well, when's it going to be adopted? When are people going to use it? And things like that. And, I understand what they're saying. I think what they're really saying is that when will I be able to see or use it everywhere I go? Like right now, you can go to your 7-Eleven or your Starbucks, and you don't have the option to buy with cryptocurrency. So I think that's what people are saying. But the problem is they're failing to see the signs that are right in front of us. And so what do I mean by that? Well, if you actually look at the data, you'll see that it is growing at a faster rate than you can even imagine. It hasn't reached full penetration yet, but that's just because technology takes time to adopt. People, sometimes they get way too over anxious here. I think it was Bill Gates. He said people tend to overestimate what can be done in a year, but underestimate what can be done in a decade. And so that's sort of what we see here. We know, like when the telephone was invented, for example, having a telephone to be able to call somebody across town or across the country was certainly better than having to ride on a horse for a month to get there. But yet still it took 80 years for it to be at full penetration, which is typically considered about 80%. It still took 80 years, even though it was so much better. So things take time, and that's where we're at. But like I said, we can see this. Recently, some research came out from Castle Island Ventures and Coinmetrics about stable coins. Now, you have Bitcoin, which is a cryptocurrency, and then stable coins are sort of a cryptocurrency that are pegged to $1. So if I give you $1, you get a stable coin back. And those stable coins, the dollar-backed stable coins, can be moved just like cryptocurrency. I can store them on my digital wallet. I can send to you. They're not as secure. They're not as censorship resistant, but they work pretty good for this kind of point that we're in right now, and they really seem to complement Bitcoin. So in developing markets like Nicaragua, El Salvador, all throughout Africa, you're starting to see how the stable coins and Bitcoin are sort of used together, where the stable coins are more of like the short-term money. That's if I need groceries next week, whereas Bitcoin's kind of more for like longer-term savings. And so we're starting to see the rise of stable coins that's blowing up because dollar demand is growing so fast. So if you're in Lebanon, Turkey, Afghanistan, if you're in Venezuela, Argentina, you're losing value in your currency so fast, you have to get out. You have to leave the Turkish lira and you have to get into dollars if you can get it. The problem is, of course, these countries don't want you to get dollars. As a matter of fact, in Argentina, the government's official exchange rate is like 250 to 1. The black market exchange rate is like 500 to 1 because people want to get out of their currency so bad, but it's very difficult. But US dollar stable coins are an easy option for them. And so we're seeing that blow up, and it's good for the United States because the US dollar is getting adopted more throughout the world as well. So it's very complementary at this point in the stage to have these work together. And what we saw from this presentation from Castle Island Ventures showed the annual settlement volume of stablecoins relative to other large payment and settlement networks. So payment networks like Visa, like MasterCard, like American Express, like PayPal, etc. So other ways that people use to send money to make payments. Now, what we can see, according to Coinmetrics data, the annual settlement volume of stablecoins is basically the same as Visa. So that's like one of the big things. Well, it's slower than Visa, right? The difference with Visa is actually, first of all, Visa isn't fast. Now, if you go to the store and you buy with your Visa card, whether it's a debit card or credit card, you put your card in, you have to wait for it to call, you put your passcode in, whatever. That probably takes, I don't know, what is it, 50, 30, 45 seconds, 60 seconds, maybe a minute. But that's not really how long it takes for the transaction to go through. What actually happens is, if you're a merchant, you already know this, that calls up the credit card, it okays the transaction. But me as a merchant, I probably don't get those funds for 3 to 5 days. So it's not actually that fast. It's not final settlement. It takes 3 to 5 days for that money to actually get into my bank account. And then for typically up to 90 days, you could charge that back on me. So when is final settlement? Final settlement meaning when I finally have the money and it can't be taken back. That could be over 90 days. Whereas Bitcoin, maybe it takes 5 minutes, but that's final settlement compared to the 3 or 4 days Visa takes. So you really can't compare this to apples to apples, but Visa is the biggest payment processor in the world. And like I said, now stablecoins have reached the same level. We can see that stablecoins have surpassed remittance payments from PayPal. The only thing that does more than Visa is Fedwire, because they obviously do massive dollar amounts at the same time. We can see that while stablecoins have outpassed Visa, Bitcoin has as well. Visa does about $10 trillion per year annually, and stablecoins and Bitcoin are both basically on par with that. So cryptocurrencies, they're coming on strong. They are getting adopted. They are not everywhere. I get it. You don't see them everywhere you go. But if you look at the data, if you take time to understand the trend, you'll see that it's catching up quickly. And on top of that trend, another way to move money around the world has been Western Union and MoneyGram and other things like that. And MoneyGram came out with a big news release this week saying that they're launching a new non-custodial digital wallet next year. Now, what does that mean? Non-custodial. A non-custodial wallet means that they don't hold the funds for you. It means you're able to hold your own funds in your own wallet. You see, when you use a wallet, a cryptocurrency wallet, some of them are custodial, meaning I have access, I own it, or some are non-custodial, so they have it. And what they want to launch is this non-custodial digital wallet that will let customers basically move from fiat across a digital currency rail and back to fiat seamlessly. So for example, if you're in another country, you're in Mexico, you want pesos, I'm in America, I'm using dollars, I could send fiat dollars. It would move across this digital currency rail, and then you could get it back in the fiat of your choice, like Mexican pesos, for example. Now, if you're into the Bitcoin crypto space, then you might recognize this. It sounds sort of like what Jack Mallers' company Strike is doing. They're sending the money via crypto rails because it can be done in seconds and not days. Traditionally, right now, if I send you over Venmo or PayPal, I send it over Visa, etc., it takes days for that settlement to go through, but if I do over crypto rails, it happens almost immediately. And so by converting it on either end, they can use this new network. And that's what MoneyGram seems to be doing. Now, they didn't put out full details of this, so we don't have access to all of it, but based off of what they told us, fiat, digital currency back to fiat, it sounds sort of just like what they're doing. They think that their non-custodial digital wallet will redefine cross-border payments and enable MoneyGram customers to send and receive money in new and exciting ways. Or you can just send stablecoins without MoneyGram. You don't need MoneyGram to do this. You can do it with Bitcoin. You can do it with Bitcoin over the Lightning Network for almost free and almost instantaneous. You can do it with stablecoins. You don't need MoneyGram. So while I like to see, the PayPals and the Venmos and yes, the MoneyGrams getting into this, it's sort of a Trojan horse. Now, one thing that MoneyGram does do is they want to create locations, almost like ATMs, that allow you to cash out the digital assets. So they call this utility. And so now if you send that to me, I can take this new MoneyGram digital asset and go actually get cash. And so you can't really do that with stablecoins and Bitcoin right now, although there are Bitcoin ATMs depending on where you're at in the world. There was a big meeting that happened this week between the G20. These are the top 20 nations in the world. It happened over in India, and they created something called the New Deli Agreement. Now, that's a big deal because the top 20 nations have all basically agreed to this. Now, I say the top 20 nations, except for China and Russia decided not to go. It's a pretty big deal. I've covered this before, so I don't want to spend a lot of time talking about this, but I think it's pretty important to see that you have the top 20 nations, except for 2 of the top 5 potentially didn't go. President Xi was there at the BRICS summit, which was not the top 20 nations, it's the lower 20 nations, but he didn't go to the G20. And he basically said, forget you guys. I'm on to my own. I'm doing my own thing. At least that's sort of the narrative that was spun up. But at this G20, it's a big deal because like I said, it's a big chunk of the world. It's the top 20 nations of the world. And they came up with something, like I said, called this New Deli Agreement. And they published their outline to show what their policy plans are, what their priorities are for the member nations. Now, when you read through these, they're a little bit vague and ambiguous. And a lot of times the laws are made to be vague and ambiguous so that they can apply them arbitrarily, or maybe they don't want to directly say exactly what they're for. The problem with that is that they can be applied broadly and arbitrarily. So we don't know exactly what they mean. Now, it could be just like, oh, these are like big dreams that we have, or this could be we have some very covert plans we're not telling you. So we have to sort of use some of our own opinion when we're trying to kind of decide. But let me just tell you what some of these things are. So in this declaration, you have that reached consensus with the top 20 nations. You have an international commitment to dramatically scale back the use of private and public lands. Restoring by 2030 at least 30% of all degraded ecosystems and scaling up efforts to achieve land degradation neutrally. Grow less food, feed less people, allow less people to live. I don't think, is that what they want? They want to scale back the use of private and public lands. So what do we use public and private lands for? Well, we use public and private lands, sure, to build, I guess, national parks, okay. We also use it to get minerals and resources out of the ground. We use it to get energy out of the ground, oil, gas, things like that. We also use it to grow food. So if we use less land, does that mean we get less energy, we get less food? Potentially. They don't say specifically. But if you look at their other agendas, such as like the Sustainable Development Goals, the 2030 agendas, and things like that, then you can kind of put the pieces of the puzzle together, and that sort of seems like what it means, at least to me. We saw that they have a commitment to halt and reverse biodiversity loss by 2030. We don't know exactly what that means, but it looks like it could mean potentially an end to land development and also the return of land that's currently occupied back to its natural state. So how could we, again, what do we use the land for? Well, for food and for energy and resources. If we don't have that, then how do we continue to feed the world with that? It's a tough one. We saw that they had a plan for international governance of AI. So they want to come up with a global, responsible way to use AI, things like that. Is that really what they want? Or do they want to just control technology? Interesting. We don't know. Again, I'm going to let you draw some of your own conclusions here. I don't want to be the conspiracy theorist here, but these are the facts that they did have this meeting, and this is what they came out with. In another document of official policy recommendations titled the G20 Policy Recommendations for Advancing Financial Inclusion and Productivity Gains Through Digital Public Infrastructure. It's a long title. They talked about creating digital IDs. As a matter of fact, digital ID appeared 83 times in the document. Now, they talk about furthering financial inclusion, at least that's what they say, especially in low and middle income countries where insufficient documentation is often a barrier to account ownership. The problem is that with a digital ID, then they could require everyone to have it. The problem with tools is that they make our lives better by making things more efficient and convenient, but they also prevent they're also tools that can be used against us as well. So for example, in China, everyone has a digital ID. You have to take a facial scan to get access to the internet, and then nobody can post anonymously. You say something mean about the government, something they don't like, they know who you are. And so the problem with digital IDs is that they can be used like that. They talked about in the New Deli Agreement expanding the international tax system. They want to build a publicly regulated and controllable digital public infrastructure to create a global minimum tax. I'm kind of against that. Now, it doesn't really matter to me as an American. No matter where I move for the rest of my life, I have to pay a federal income tax to the United States, which is above what the minimum tax is. But if you're from another country, like Canada, for example, you can move to other countries that don't have taxes. They want to get rid of that. They don't want that happening. They also want to embed global financial institutions, including banks, with ESG. So they want every financial institution, every international institution to ensure that all the financial institutions and systems get behind the sustainable practices. Now, we can see that this is not worked out so well in the past. As a matter of fact, Sri Lanka, which was the poster child, had the best ESG score in the world at like 98, fell because of that. Now, one thing that I'm seeing is that while we're certainly seeing the G20 and these people get together and continue to push this ESG narratives, we're starting to see the ESG narratives start to fall apart at the same time. So, for example, many of the Wall Street companies like BlackRock spun up ESG funds. I think they've all pretty much been shut down. In the United States, I think it was like 26 states said that they can, the pensions can no longer invest into any companies that have ESG funds. They started to penalize banks that have ESG narratives. So it's almost like these global elites, like at the G20 and the World Economic Forum, have built up this bucket of ESG, but now the bucket's getting a lot of holes, and they're continuing trying to put more in the top of the bucket, but it's leaking out the bottom, and the holes at the bottom are getting bigger and bigger and bigger. So I'm hopeful for that. I mean, maybe I'm hopefully optimistic because I'm an optimist. But I think this plan is starting to fall apart, but they're not letting go of it yet. And so we're continuing to watch that. It's going to be interesting. They want to pass uniform laws on regulations for cryptocurrencies, which I think is pretty interesting. What's interesting is, how does the top 20 nations get together and agree on anything? Just in the United States alone, we can't even agree. In the United States, we can't even get regulations on cryptocurrencies. And this week, we saw Gary Gensler in front of some Congress committees and was just getting completely wrecked. As a matter of fact, they've been calling for his resignation. Now they're trying to pass a resolution that would change the entire organization of the SEC, so we don't even have a chair there like Gary Gensler anymore. And they're telling him this. So, like, this is just in the U.S. We can't even agree, and they're trying to shut this down. Like, how do the top 20 countries agree on this? It's pretty interesting. I don't think it's going to work, but this is what's happening in the world. They want to regulate you. The whole world wants to be in on it. They want to take away your land. They want to control your digital ID. They want to control your money. But I've been talking about the Federal Reserve, obviously, a lot. But I've been talking about specifically the Federal Reserve going broke. Which sounds pretty crazy because the Federal Reserve literally prints money out of thin air, right? Like, don't they just create the money? So how do they go broke? I mean, only an incompetent government agency could do that, right? Well, yes and no. The Federal Reserve has gone broke because they have raised rates at the fastest rate in history. They've booked a $100 billion loss in just the last few months on their operations because they're having to pay out more interest to banks on reserve deposits at the Fed than the central bank earns from its portfolio of bonds and mortgage-backed securities. So just like any normal bank, they have income and expenses, and because they've changed their rates so much, they're now losing money on that. Unlike federal agencies that spend tax dollars allocated by Congress, the Fed is self-funding, right? It earns from its asset holdings and fees charged to banks for, the different types of services that it provides. And it used that to pay the roughly $6.3 billion in annual expenses that they have. They employ about 24,000 people in Washington and other cities across the country. What is that per person, Dan? $6.3 billion divided by 24,000 people. See if you can figure that out. But so basically, they have expenses just like anybody else, and now they're losing money. They lost $100 billion, and now they're having to lay off people. As a matter of fact, they had their first layoffs in 13 years. Now, what's interesting is they have, like I said, they have to start laying people off at a time when lots of people are getting laid off. But to see the Federal Reserve have to do this, to lay off 300 people from its payroll this year, it's a pretty big deal. Now, the headcount has been growing pretty steadily and pretty rapidly since 2010, so maybe it was time for a little bit of pruning, but a Fed spokesperson said that the cuts are focused more on the staff of the U.S. Central Bank's 12 regional reserve banks, and mainly hit the information technology jobs, including most of them that are just like no longer needed because now they have like cloud-based computer software and things like that. So they're saying it's really not a really big deal. These are jobs that we really didn't need anymore. And they're not really affecting us, so we're just trying to cut costs. But it doesn't change the fact that they're losing $100 billion. It comes out to $190,000 per person they'd be paying. Wow, it's a good job to be a banker. $190,000 average. I'm guessing obviously some people make a lot more than that and some people make a lot less than that. But what's interesting to know is that, the Fed typically generates a profit doing this. It always has. And what does it do with those profits? Well, the profits go to the government. It goes to the U.S. Treasury. But since the central bank has been losing money, then there's no money going to the Treasury. So what does the Treasury do? Well, the Treasury is losing money. Treasury is losing money from a lot of places. Tax receipts have completely plunged. So the Fed has been raising rates higher, so we haven't seen, prices of things, asset prices going up. So there's not a lot of capital gains being taken. Incomes have gone down. So tax receipts have plunged. So we have the Fed not giving them money. I think about $300 billion they lost that way. Tax receipts have plunged. So the Treasury is going broke. And this is a big, big sign of where things are going. Now, how did all this happen? Well, we can probably go back to the pandemic when the Fed lowered rates to the lowest rate in history, right? Basically to zero. In order to service the debt, then the Fed in less than a year purchased $4.7 trillion in additional assets, including $2.5 trillion in mortgage-backed securities. Central bankers invested this money in the form of long-term loans locked in at very low rates. But then they started to raise the rates. You've heard this story before. It's what happened in the banking crisis. And as they started to raise the rates, it caused them to have losses. In just the first 2 quarters of 2023, the Fed incurred a net loss of $53.5 billion on interest expense. Oh, no big deal. Just half the year, we lost $53 billion on interest expense. And this is only getting worse. The higher rates go, the longer rates stay higher, the more the credit markets stay tight or get tighter, the more they continue to lose. It's a big deal. It's a really, really, really big deal. On top of that, we see, like I said, the Treasury is also going broke. And the world's seeing this. The world's watching this, which is why we've been seeing the U.S. credit rating start getting cut. What happens when your credit rating starts getting cut? Well, when your credit rating starts getting cut, people don't want to extend you the same amount of credit. And that's exactly what's starting to happen. And now the Treasury is starting to have problems with people buying their Treasury notes or buying the debt. They don't want to buy it. And that's causing rates to go higher and higher and higher. But that's also causing a problem. It's only exaggerating the problem. But don't worry, they got a plan. They got a plan. So now it appears that the Treasury wants to start buying back the bonds. The resilience of the world's biggest bond market is a top priority as U.S. debt officials prepare to start buying back government debt, according to Josh Frosch, the Treasury Department's Assistant Secretary for Financial Markets. So they want to start buying it back. Why would they do that? Well, because the bonds have lost money, so they have to buy them back at a discount. So they're losing money. Frost said, our goal is to, quote, ensure that the Treasury market remains the deepest and most liquid market in the world, even if we have to pretend that it's working and we have to lose a lot of money to do that. He didn't say that. I added that. But the Treasury is expected in 2024 to start regularly purchasing its bonds for the first time in more than 2 decades, a move that comes after years of increasing scrutiny on Wall Street about the $25 trillion market's underlying fragility. Now, there's 2 different things they're really trying to do with this. All right? One, they want to help keep the liquidity in the pockets of the market and to help kind of smooth out the volatility of the bill issuance as it manages its cash balance. Right? So they have to start buying these things back. They want to keep the liquidity going. They can't have some of these things go no bid. That would not work good. Frost said that the Treasury's liquidity-focused buybacks were not intended to address periods of acute market stress, a responsibility that falls under the Fed's mandate to ensure financial market stability. So the Fed has 2 mandates. 1, stable prices. They do that by trying to maintain a 2% pegged rate to inflation, 2% inflation. And 2, they're trying to keep stable prices and full employment and keep the financial markets stable, keep prices stable, keep the liquidity going. But if they don't continue to keep the liquidity going, then the whole system starts to fall apart. It's just too much stress on the system. In August, the Treasury announced the first increase in the sale of notes and bonds in over 2.5 years to address a growing fiscal deficit and the lack of support from the Fed as the central bank rolls debt off its balance sheet through quantitative tightening. So they've been trying to get rid of a lot of this debt, but that's a problem. It's tightening the system. But when they tighten the system, the liquidity goes away. The real story here is the Treasury is already shifting to quantitative easing while the Fed continues to pretend that it's tightening. And so this is where it's interesting. So what we're really seeing is a battle. We have the Fed, Jerome Powell, and the Federal Reserve sort of at odds and fighting against Janet Yellen at the U.S. Treasury. The U.S. Treasury wants to continue to spend money, continue to print money, but the Fed is trying to bring maybe a little bit of austerity back to the dollar to keep the dollar strong. You always hear that they don't want to give up control over money. Well, who doesn't want to give up control over money? The Fed doesn't want to lose control to the ECB or to the BOJ or the PBOC. And so the Fed wants to rein in the spending. They want to keep the dollar strong. They don't want to lose control over money, but the Treasury is spending like a drunken sailor. And now the two are at odds with each other. It's an interesting dynamic to watch play out, but don't worry, I'll keep you up to date. One of the best ways to protect yourself as all this goes down is to completely sidestep all of this madness and get out of the banking sector altogether. And one of the best ways to do that for all of history has been with holding gold. It's been money for over 5,000 years, and it's the perfect chaos hedge. I work with a company called Universal Coin and Bullion to get my gold. It's a company that I trust, which is super important. And not only do I trust them, they have great prices. Dr. Mike Fulgens and his company, Universal Coin and Bullion, have a very special offer for my listeners, a silver coin offer just for my listeners, but you have to say my name when you call. But you basically can get an American Silver Eagle coin with no dealer markup for just $27 each with a limit of 3. You get free postage and a free award-winning gold investment guide. Again, if you mention my name. Give them a call. Call Universal Coin and Bullion to get this $27 Silver Eagle coin deal today. Plus, great prices on any of their other gold products that they have. Give them a call, 1-800-UCB-GOLD. Again, 1-800-UCB-GOLD. Tell them Mark Moss sent you, or you can go online to universalcoin.com/Mark Moss. It's the government showdown. It's the government shutdown showdown. And we've talked about this before. It's nothing new. As a matter of fact, the government's going to get shut down all the time because we have this debt ceiling and we constantly get here. We've covered it extensively just recently. It sort of starts getting old after a minute, doesn't it? But I'm a little bit interested in this one specifically. I probably would have skipped over it, except for there's one key piece in here. And it's the same old story. You know, Democrats want more spending. Republicans want to pretend like they're trying to be a little fiscally responsible. Look, man, I'll equally point blame at both sides here. If you tune into my show regularly, you already know this. The Democrats want to spend $10 trillion. The Republicans only want to spend $8 trillion. Like, they're trying to act like they're fiscally restrained, so we're just going to spend a little bit less money. Either way, they're both spending money, right? But this was a little bit different. And the reason why is because as I spent time in the previous section of the show, if you're just tuning in, talking about what is going on in Ukraine, how much money has the U.S. sent over there, where does the money go, and what's really going on. So we know, I'm sure you know, obviously, we have this situation with Ukraine going on. The U.S. has sent about $100 billion over there, unaccounted for. We don't know where it is. Weapons have gone over there. They've ended up all over the world, all these things. What is going on? So we broke that down. If you missed that, go listen to it on the podcast. Just search the Mark Moss Show or go to YouTube and just search Market Disruptors. But here we are facing another government shutdown where the government can't agree on how much more money we should have. And the Republicans are trying to hang strong. And specifically, there's a House Freedom Caucus. So there's a few people that are trying to hold restraint. Matt Gaetz and from Florida and some other people. And they're trying to hold McCarthy, the House Speaker, trying to hold him in check here. And he's like, don't give in, don't give in, don't give in. And so here we are facing a shutdown. Probably by the time you listen to this, we'll probably already be somewhere maybe past that. So what's going on? But what's got me interested is that we have a couple things. So one, they're threatening us that if this doesn't go through and the government shuts down, then all these public services that you need, want, like, and depend on will be shut down. So, you know, if you work at a library or a national park, you won't be able to go to a national park. And, you know, if you're a minimum wage employee there, you're not going to get paid. Meanwhile, pretty much all the politicians that can't agree on anything or get anything done will continue to get paid. They'll get paid, no problem. But you, the low-level, you know, minimum wage worker, you get nothing. You know who else gets paid? Ukraine. Ukraine continues to get funded, but not U.S. service members. not our military, but we pay for their military. This is a pretty big deal. Now, they always want to talk about, anytime there's a budget cut like this, well, you're gonna lose access to police, and you're gonna lose access to schools, and you're gonna lose access to parks and recreation and libraries. How about the hundreds of millions of dollars that we send to Afghanistan for like social justice training and like gender reassignment? How about we cut those things first? Like that's where I would probably start. But they want you to feel the pain first, right? This is how they work. Gets me a little angry, so I might get a little fired up when I'm talking about this. But there might be a resolution here. I talked about this earlier. Mitch McConnell was talking about how the American people need to get this deal done because we need to send the money to Ukraine. He said that Ukraine is the number one issue for Americans. No, it's not. It's not my number one. It's not even my top 20. I'm guessing, and I'd like to hear from you, hit me up on social media, I'm guessing you probably care more about all the violence in the cities, like what's happened in Philadelphia this week, what happens in Oakland, in San Francisco, in Seattle. You probably care about that. You probably care about all of these stores getting looted out and having to close down everywhere. You probably care about that. You probably care about all the corruption in government. You probably care about that. You probably care about political opponents being weaponized or the DOJ being weaponized against political opponents. You probably care about that. You probably care about all these people in Congress doing insider trading, all that fraud scam. You probably care about Menendez getting caught for bribing with gold bars. You probably care about the Biden crime syndicate. You probably care about those things. You probably care about transvestites dancing at your kids' schools. You probably care about that. You probably care about Gavin Newsom trying to shove these pornographic books down into elementary kids' throats. You probably care about that. You probably care about the head of the Department of Education saying that parents have no right to talk about their kids' education. You probably care about that. There's probably 20, 30, 40, 50 things you care about before you care about Ukraine. You probably care about the 7 million people that have come across the border in the last couple of years, 300,000 people coming across the southern border just last month alone. New York City is spending billions of dollars to house these illegal immigrants at a time when they're broke. They have no money. How are they going to fund this? They're kicking World War II or Korea War veterans out of their housing to make room for illegal aliens? The border is completely open. They're coming across with zero screening, zero background checks. We know that the cartels in Mexico are using this. They're egging this on. They're incentivizing these people to flood the borders so they can push all their drugs up into the borders. We know this. You probably care about that. That might actually be the number one issue in America right now. And it doesn't matter which side of the political aisle you're on. Even if you're from another country, you care about this because it's exactly why you left your country to begin with. Nobody wants this. And this is why it's important. While McConnell says that Ukraine's the number one priority, no. The border, in my opinion, has to be the number one priority right now. 300,000 people just last month. The U.S. Border Patrol spends $25 billion a year. Why? Why are we spending $25 billion a year on the Border Patrol if they're not even stopping anybody? We should at least just stop running that. How about we just shut the Border Patrol down? That saves us $25 billion a year. So what's interesting about this debt ceiling debate is that finally McCarthy came to the table and said, okay, fine. We will put together a bill to provide funding for to keep the government going if we can restart construction of the U.S.-Mexican border wall. That's it. Now, that to me seems like the number one issue, so that should be a pretty easy concession to make. We'll keep the government open. We'll give you all the money you need, but let's do something on the border. The government can't keep this open any longer. We have to show the nation that we'll do what's right. Nope. Biden says, nope, it's not going to happen. Why won't that happen? Why won't they address the single biggest issue that's happening right now? 300,000 people, buses showing up everywhere of these people. It's almost like they want to keep it open. Let's just look at this. So McCarthy says, hey, let's restart construction on the border wall. Well, we know in August of this year, August 2023, Biden administration is quietly selling off border wall parts to thwart a GOP push to use them. The Biden administration is quietly auctioning off millions of dollars worth of unused parts from the border wall for peanuts in an apparent end-run around pending legislation in Congress. So there was potentially legislation, laws that were going to come through Congress that was going to make them have to reuse them. So he's thought, shoot, what we'll do is we'll just dump all this stuff before the law gets passed. That way, if the law gets passed, we can just say we don't have it anymore. Now, I know from asset protection strategies that if you move to hide your assets, knowing that there's pending litigation against you, that's illegal. You would think this would be illegal as well. President Biden is selling off parts specifically because he was afraid legislation might come say they have to build the border wall. So now you obviously know what his intent is. They want the migrants to come here. They want your town to get flooded. They want your Korean war vets to get kicked out of their hotels. They want New York City to spend billions of dollars that they can't afford. Why? Why would they want that? I just did a video on my main YouTube channel breaking down this immigrant situation, and I gave two possible scenarios. One is the most likely. If you really want to know what that is, go watch it on my main YouTube channel. Just search Mark Moss on there on the immigration problem. But we'll see if the government stays open or not. Here we have a deal. Hey, we'll give you the funding we need, but only if we can build the border. If it doesn't happen, then you know what Biden wants. Bring on the immigrants. Let's flood the system. Let's overwhelm the system. Let's bring the system down. If you're just tuning in to listen to the Mark Moss Show, run through some of the latest breaking news headlines this week and giving you my spin and opinion on it. Hopefully you appreciate that. That's what I got. Thanks so much for listening. Until next time.